Good morning. Alrighty. Good morning, Jumbo, Ohio. Oh, let me shut the office door. Hang on. I can hear my echo. Did you meditate this morning? Oh. Good morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Chicken, Slim Shady. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. G'day, mate. My name is Wayne. Nice to meet you. I salute you. Today I am enjoying a hurricane. So about midnight last night, it was dead, calm, and quiet. And then by 2 o'clock in the morning, we have like 80-mile-an-hour winds or something like that. So, hey, welcome, Zeta. I've heard every version of the name, but just another hurricane. Can't hold me down, brah. I've been through hurricanes and tornadoes and typhoons. Oh, how about this? Here's a great story. My kids just, oh my God. Class 10 typhoon in Hong Kong, flying right over Hong Kong. And I'm in the tallest building in Hong Kong, and on top the roof of the tallest building in Hong Kong, there's a swimming pool. So I go up there, and of course there's no tourists. Like everything is blown over, and the building's doing this. Whoa, like no joke. So I climb in the pool, and the waves would go up onto the deck. And then it'll go and up against the windows. I'm not joking. I'm 140 stories tall above ground. And the water would go up over the glass. So I'm swimming in the pool, and I Skype my wife and kids. Like, check this out. This is awesome. Look at this. I'm 140 stories. It's a class 10 hurricane. They shut the building down. Like, literally, there were vans down below. The vans, it was so windy, vans were rolling over in the wind. Delivery vans. We're actually blowing over. Can't hold me down. So a guy comes and he's looking at me like, what are you doing in the pool? You know, one of the staff guys. He's like, what are you doing in here? But he didn't say it. He just looked at me. He's like, are you okay? And I said, well, I could use a pot of coffee. And I go, so no shit. He goes back and he pours me a pot of coffee. Oh my God. It was fantastic. So anyways, a little wind can't hold me down, but if the internet goes, hey, it ain't my fault. So anyways, I'm here. I'm ready. I'm alive. I'm a survivor. I want to kick some butt, take some pips. So let me know how I can help. What are you working on these days to improve? Are you working on anything these days to improve? Are you on technical analysis, fundamental analysis? How's this doing? Huh? You got that in check? Your third eye? So let me know how I can help. I've been around. I've done a lot of things. We can cover scalping, spot trading, swing trading, position trading, intraday trading, carry trading, whatever. I'll do my best to help. Make sure you ask questions, take notes, but be involved, right? Price action is another one. Great. Emerald, perfect. I love price action. So very, 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 very cool. Don't trees go down with that wind? You know what? I knocked. So I have like 2 acres, and I knocked down a lot of trees recently. So the trees that would come down have come down. So I think we're going to be fine from there. So cool. And then my topic that I'm studying this week, or at least right now I'm studying at school, distressed debt. So if you're interested in that, and then I think, wink, wink, I think I might have a deal I'm working on as well. Wink, wink, nudge, nudge. Oh, and I'm hoping to get the book club going, and so much going on. So many moving pieces. Thank you for being here. Thank you to Traders Way for supporting what we do. You're a trader, they're a broker, they're a good broker, they're a fast broker, they're a competitively priced broker. But the thing is, right off the bat, they've come to me and said, Wayne, can you help traders improve their trading so that they not just survive but actually thrive? Because for us, they'd be better clients, right? But can you help? Can you help? Can you help through education? Now think of that. You're trying to pick an execution partner. How about one that thinks that way? That their greatest success comes from your success. All right? Right? Don't pick a broker because they're low spread. Right? Oh, the spread's only half a pip. BS. They're going to slip you to death. So don't believe the hype. Don't believe the hype. Right? So make a decision based on logic. Okay? Cool. So we're here. All right, so this is where we are. Last week we said if there's no stimulus, this is heading down to this price actually. And if there is a stimulus, right, we would do this. You guys remember that? It was a different color, but we had it this way, right? We probably have it this way on a different chart. I just want to remind you. So what do you stink? Okay, within the first few hours of the week, it looked great because this is the perfect sell. Now my sell isn't perfect, but I made it on Friday, not Monday. But if you look at the Monday open, you know exactly. If you go through my swing trading course, you know that that's a bear sell, and you knew it was going to happen at that exact time, or of course you wouldn't have traded it. So it's not just an issue of what price you would sell things. It's, do you know when to be at the chart? Okay? That's that. It helps, right? It helps to ambush if you know exactly where and when the bad guys are going to walk past you. Because now you just show up, you're like, okay, they're going to be here in an hour. Let's set up let's take the high ground. Let's set up the crossfire. Let's booby trap everything. And, hurry up, everybody. They're going to be here in 15 minutes, right? This is how I am. I'm like, I got to go in 15 minutes. The market's going to go open. And if we're at those threes, I'm dumping it. And that's what happened. Okay. Very cool, right? So what I said to you yesterday, the conservative target here is right on 17, and we're on 17 right now. So we dropped it from 118.50. Okay? We dropped it from 118.15 to 117. Okay? There you go. Mahai says, the price is the truth and vice versa. How do we use this in our thinking process? The only thing I want you to think about is your trade plan. So the fear, if I say I don't disagree with the statement, everything is in the price, or the price is the truth, but lots of people preach it as a way to tell you, hey, you don't know nothing about nothing. You don't know fundamentals. You don't know this. You don't know that. Don't worry about it. You don't need to know fundamentals. You don't need to know macroeconomics. You don't need to know central pricing. You don't need to know nothing. It's all in the price. And of course, that is a big load of steamy nonsense. Okay? A big load of steamy nonsense. What do you mean you don't need to know? That's the dumbest thing ever. And especially if you aspire to being better than a good trader, you want to be a great trader, or maybe a professional trader, right? What do you mean it's all in the, you need to know. For example, it's all in the price. Good. What are you going to do in January? I don't know. I can't tell you till January. I already know what I'm going to do. I'm a boss. Okay? If you are price only, you're not a price maker, you're a price taker. Because you never know what's going on. So you just take the market price. Wrong. Amateur. Okay? So, but is price stupid and all that kind of stuff? No. The most important thing is once you know what you want to do and you got your theory and your strategy and your bias and it's all put together, then when you're trading inside of that bubble of knowledge, it may be false knowledge, but it's knowledge. You know what filters to use and what not to use, and you see what you need to see, not the fear and all that kind of stuff. And what happens is then once you get into the trading mode, oh yeah, then you rely on price because everything else is already set. Okay? So just be very careful with other people's advice because I love you, I care for you. Yeah, often the everything in price thing is to cover up that they don't know what's going on. And if you don't know what's going on, you shouldn't be trading. Okay? Okay? If it was all in the price, at what point would you be short? I mean, here, I guess. So anyways, whatever. I want you to focus on knowledge. Again, the cool thing about Harvard, here it is right here. It says Veritas. Okay, Veritas. Okay, it says it right on my chest. Veritas. Okay, it's Illuminati. Right? I actually was given a lamp because I'm Illuminati now when I graduated, when I got my first degree. The Illuminati, but it's the truth. That's what the Illuminati have, is they know everything, right? They're illuminated from their knowledge. The Eastern way of saying it is you're enlightened. Illuminati, enlightened. You see right? So how are you enlightened? You have knowledge. You know the information. You know what other people don't know. You see the truth, right? So I want you to focus on knowledge and enlightenment and truth through things like research and study, right? That's why I want to do in my book, which I'll probably never write, but in my book, in my mind right now, if we would study Sir Francis Bacon, because he was the guy that pushed, he's the founding father of scientific methodology of study and testing and reflecting and test again and proving or disproving through a scientific methodology, right? So that's where I want you to push knowledge and truth and all that kind of stuff, okay? Why did I take this? First of all, I don't think there was going to be a stimulus. But the second thing is, this is a boring, simple, slap in the face, obvious, easy swing trade. So Salado Club, it's just a swing trade. Okay? Okay. So this tells me this, and then this tells me this. So I knew this on Thursday of last week, that between Thursday and Monday I'd be short. Excuse me. Now, the reason I'm short at 1850 is these pivots hadn't been set yet. So I was just throwing it down on top of a midpoint cycle level below where these pivots were based on this. But this tells me double, excuse me. Apparently I'm still a little sick, huh? This tells me double top. And then there's my double top on the pivot cluster. I mean, it's a swing trade. Okay? That's all. So that's why you need to learn how to swing trade ASAP. All right, we just hit the target 17. We just hit it. See, 1690, 1699. Okay? Yeah, on that happens. Okay, Solado Club. So this is rangy. This says double top. This is the top of the range. And those are, that's a bearish pivot cluster. And that target's here. Okay. So that's all. Emmanuel says, is it prudent to move stops? Well, first of all, yes. On Euro USD as we approach the ECB decision or exit now. Well, what was your plan? That's what I'm saying, Emmanuel. So on Thursday and then Friday and then again on Monday, I told you the target was 17. So now you can do whatever you want to do. Okay? Remember, you can't be so mechanical or binary in the sense of like, what do I do now? And what's the right decision? Dude, they're all right decisions. So if you got out here for your 150 pips profit, that's the right thing to do. If it falls down here, was that the wrong thing to do? No, it wasn't the wrong thing to do. You got out at support. It could never be. So you don't know where it's going to be in a week. You just, right? I mean, if this was trending, which I don't think it is, your next move would be this. Okay? Okay? You see that? But I'm not saying it's trending. I didn't say it was trending a week ago. I just said it was likely to fall down unless we get a stimulus package, and that's going to immediately put it up there. Unlikely. Also, again, watch the video from Friday. I'm sure we talked about the 55 EMA telling us it's a double top. Telling us there's likely to be a double top. This isn't bullish exit, so I know bulls aren't in it anymore. This is a bearish entry. I mean, it's just perfect. Okay? It's perfect. Okay? But here's the perfect exit. So what are you going to do? What you going to do? What you going to do? She's. I got a pocket full of pips and my homeboys too. So anyways. All right, so that's that. That's that. Let's go here. Yen strong, dollar strong, Swissy strong, risk off. Aussie down, CAD down, pound down, Kiwi down. Risk off, simple. Oh, you know what I want to talk about? I guess we'd have to go back to what I just did, but maybe we'll open this one. I think we had the conversation on pound, though, didn't we? Hang on. Yesterday, yeah, it was this one. Yesterday, I took the time to talk about velocity. Okay? Do you guys remember the analogy of drawing on a bow? The farther you pull on the bowstring, the more tension that you're putting into it, and the more it's going to want to snap back. Do you guys remember that? This was the conversation we had when we were way down here. Look at that snapback. Chow. Okay? And then what? Bears sold it. See, I fear that amateurs sell it because it's down, so they sell way down here, get knocked out for a loss, and then, of course, professional traders sell at resistance. They don't sell at support like amateurs do. Do you guys remember that discussion? Okay. And now going into price action, because someone asked about price action, we call this a role reversal. So the central was, kind of acting as support, and now is kind of acting as resistance. And that's the key point of price action. Okay? Nobody remembers the conversation, huh? About drawing on a bowstring? Oh, a love gone bad, turned my world to black. Tattooed all I see, all I am, all I'll ever be. All right. Let's see. No. I think we're just waiting for the election now. What is it, 5 days? ZAR. Some risk off here. The only interesting thing about Rand right now, by the way, look at that. Isn't that crazy? Don't you appreciate that I drew that support for you? Kiwi yen snapback? Well, the problem is New Zealand going negative. So maybe you're looking at it right now as snapping back, but I wouldn't expect it to, so I probably wouldn't follow it. Grumpy Cat thought about the boat story today. Very cool. So, what do you think of support? It works, right? So now what? Well, if we're below the 21, I'm bearish and aggressive. And if we breach that, we're going to the 55. The 55 says higher low or triple bottom. So right now, we stay below these candles and we're sellers. Okay? So now you're looking for bearish price action. That's not bearish yet. It could be. So now you want to see Okay? So I would say kick off the 21, double top down to the 55, some consolidation, a double top of the double top, and then price action down. So maybe by the end of the day, you're taking a new shot. It cannot go above this. So the other thing of saying it is, well, we already got the respect, so you can just sell up here. Well, I think you're going to get a double top, but you might not. Okay? So at this point, the only thing that really matters really isn't your technique or the tools you use. If you get short there and it doesn't go higher, you will make money. So what's the most important thing? You risk the least the closer you are to your line in the sand. Because your stop inevitably is going to be about the same. So if you sell here, maybe your stop's 30. If you sell down here, your stop might be 60. It's the same trade, just different timing of entries. It's the same trade. So you got the first trade, You got maybe the second trade, and then of course you got the third trade on that role reversal. So it just depends on when you jump on the clue train and when you decide is the right time. Okay? 1650. Okay? So that's that. So I'm looking at a couple of investment opportunities outside of Forex, and I thought I might get your opinion. One of them is typically if you loan a company money, you get priority to their cash flows. And that loan is a bond. Okay? And you get first priority. Now, one of the things that I'm looking at Harvard right now is distressed investing, distressed debt. So instead of like a leveraged buyout firm buying up all the stock of a company, and then now they have equity ownership, then they can come in and take over the company and direct it. Like, we're going over here. We're launching this product. We're going to do all these new initiatives, right? The opposite of that, but similar, is instead of someone cornering the market on shares, they're cornering the market on the debt, and then they try to restructure that debt, and then maybe get ownership through there. So typically, going back to like what people typically do, they say, okay, this big company, this reliable company, this profitable company needs to borrow money for cash flow, and they will pay you interest on that. So you have this asset which can actually be sold in a secondary market, so you can resell your bond, and you're not likely buying a brand new bond that was issued today, right? You're not buying a fresh cut bond. You're buying a bond that's already been sold. So you're buying the bond from someone else. So you can make money on that transaction too, right? Anyways, so I thought about lending money to companies, which would pay me higher. You know, if I was in cash in my account, I would tell you cash is trash, right? So I thought, well, I could deploy some cash. The problem with bonds, though, is there's no upside, is there, beyond your interest rate? Now, maybe the value of your bond goes up and you can sell it in the secondary market, but then you give up your income stream, right? You give up your cash flow for cash, but I don't want cash, right? So you see, the interesting thing about that is I don't really want a bond. I'd like ownership, because and also a bond, it might be a 2-year bond, a 1-year bond, 6-month bond, 5-year bond. The maturity, like, I'd like to make an investment that I can be in for 30 years and earn income. And a bond typically isn't the right vehicle for that. You typically have to keep rolling over bonds, right? So what should I do here? Well, I have an opportunity to lend a very, 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 very big, well-known American company that has huge cash flows historically. Things are not good right now. Stock price of this company is really low, but if you look at their debt levels are very low. So I would say it's not a risky company. It generates cash and it has very little debt. But right now, the stock price is down like 60, 70%. So now, when you look at their dividend, this gets interesting now. Let's compare a dividend to an interest payment to a bondholder, the coupon payment. Right now, if you lent a big, well-known company money through a bond, because that's all bonds are. You're being a bank. You're lending a company money. They tell you that when they're going to pay it back, and they tell you how much interest you're going to pay, or they're going to pay you. Also, if you buy it from the secondary market, you might pay more than the face value or less than the face value, depending on the situation. So you might pay $10,200 for a $10,000 bond. And you're like, that's weird. So, but whatever. So every every 6 months, you're going to get a little bit of money from the company that you lent money to. That's your interest payment. Well, some stocks offer dividend payments, and every so often, a few times a year, they give you some cash. They're like, hey, thanks, Bubba. Here's some icing on your cake. Now, remember, bond owners don't own the company. They're just like a bank lending the company money. Well, if I buy the stock of a depressed, because this is what I'm studying right now, right? I'm doing distressed debt, but what about distressed equity? So this is what I'm thinking. Right now, when you look at the price of the stock and the dividend that you receive, because remember, they tell you the dividend. They say, we are going to pay you, $3 a share dividend, right? They tell you, it's announced. It's like saying, we will pay you 1.5% on this bond. The bond will yield 1.5%. Now, yield isn't the right word because it depends on your price, but let's say you bought it at face value. All right, cool. See where I'm going? So, the dividend on this company is already well established. It's published in the Wall Street Journal, right? You know exactly what you're going to get. The thing is, the price has dropped very significantly. So check this out. If I lent a good American company that's like 100 years old, it's got a century worth of cash flow analysis, you know the management team, you know the products and services and reliability of them and their customer base, you know their debt levels. I mean, you can really analyze the risk, right? The biggest risk in investing is you don't know the information. There's an asymmetric information problem. But this wouldn't exist for this type of company, right? So if you were to buy a bond with that kind of company, what kind of interest rate do you think they're going to pay you? 1%? Right? 2%? 0.5%? Like not very much, right? So check this out. If you look around, you will find well-established companies selling stock now for 50, 60% less than it used to be, right? And then when you look at the new current market price, the distressed price of the equity now, not the debt, the distressed price of the equity, and the dividend they are paying, you can pick up 10%. Not 1 or 2%, 10%. Which means in just 10 years, you got all your money back. Just on collecting dividend payments, in 10 years, you have zero risk. But I'm talking about, I want to hold this thing not for 2 or 3 years. I want to hold it for 30 years. So in 30 years, collecting dividends, I'll be up 300%, right? Plus, and here's the cool thing, if the value of the stock goes up and you own a bond, it's irrelevant. It doesn't do anything for you. You don't have any alpha on that. If I'm taking a look at this company with a 20 or 30 year outlook and the price of the stock goes up, I get all that money too. I'd like to make 500%. I'd like to make 1,000%. So very interesting, right? So I've seen a couple of companies that I'm kind of scouting where I can put some money there, and by the time I'm too old to work and care, like I'm never going to be too old to work, but it'll just be like, Wayne, are you going to write another book? I don't give a damn. I've written too many books. Just leave me alone, right? When I'm that grumpy old man, just leave me alone. Then I can sell it and say, give me my 1,000% back or whatever, right? So I can beat inflation. I can beat savings rates. I can beat bonds. I can collect almost 10% interest payments. So that's even better than Rand, right? Well, of course, Rand is leverage, right? I can collect these interest payments and get full upside opportunity. Now, of course, I collect full downside opportunity as well, but I wouldn't buy it if I thought I would lose money on the long run. So I'm looking at it like, oh, these are short run problems. It's been a tough year. I get it. I've been, right? But will this company be around in 25 years? To me, that's the big bet. So what am I going to earn now to compensate me for that risk? I'm going to collect a huge dividend and pay 60 cents on the dollar for this company. What do you think? Might be an interesting play. No. I would, well, I can't say I'll say it this way. I prefer not to buy airlines. Okay? No, I like, no. First of all, I hate unions. Now, on the upside of that, like when you go to the Northeast, like I can think of times when I'm in Boston, I can think of times when I'm in New York, and you come across, union workers, construction workers, truck drivers and stuff. These guys are amazing, awesome, reliable, professional people. Like I remember one time in Boston, I'm in the North End. It's early in the morning, and there's some road work being done, which is like all the time in Boston, right? So they're digging away, and the truck driver shows up, and his dump truck is unbelievably nice. I'm like, holy schnicker, look at this dump truck. This guy cares, right? And it stops me in the tracks. Like it's beautiful and shiny, and even the wheels have been cleaned, right? Like everything about it, it could be brand new, except it's clearly a 20-year-old dump truck. And I look at that guy, he's the type of guy where he's got a hard hat on and stickers. I'm like, oh yeah, that's the good old, anyways. So he dumps the load, and then he turns the corner, and he stops. And he gets out, and he's got a rag, and he wipes the dust off the front bumper, off some of the wheel wells. He dusts the wheels, the chrome on the wheels, and oh my God, like this guy cares. I wish I saw more people with that kind of ridiculous, sickening work ethic, right? Like I'm looking at and like, I like this guy, right? Almost certainly union. But yeah, so anyways, but generally I don't like unions, and airlines are unions, and I just don't get it. Like what? You get privileges because you've been around a long time? I just don't agree with that. I just don't. But should you be paid a fair wage? Oh yeah. And that's usually where it comes from, right? But when you get like seniority crap, right? Just because you've been around a long time, then you start creating a culture of nobody gets fired. I don't like that. You suck, you're fired. So like, for example, I live in a town where there's lots of pilots, and I've heard people have the conversation like, well, I've been at such and such company for 10 years now. I hate it. It sucks. It's not even the right plane. It's not the right route. But I can't give up my seniority. I'd lose my seniority. So you could be a pilot with 25 years of experience and get hired by a new firm, and you're a punk newbie amateur. You're like, dude, I've been flying for 25 years. You're like, you don't know jack. You're not going to get any vacation. You're going to get a low wage. You're like, what? I'm the most qualified pilot here. Yeah, but you just joined the company. Like, I just fundamentally disagree. Anyways. Why not just buy the stake in a oh, well, first of all, fireworks. I mean, I'm not that big. Okay, I'm not talking about buying the company. But that's the interesting thing. So when you're a distressed debt buyer, you don't control the company. Unless they default on an interest payment or breach some other covenant. And then you can come in and say, we're going to restructure this company. And by the way, management team, you're fired. Why? Because that's why the company is in trouble. And they couldn't even they broke a covenant, which, like it could be the debt to EBITDA, for example, because the value of the stock went down or because the value of the revenue went down short term, that pops up their debt levels on and then all of a sudden, boom, they broke a covenant. And so now those guys can come in and say, okay, you essentially defaulted on us. You broke all the rules or some of the rules or even just one rule. And because of that, you're all fired. We're replacing everybody here and we own the company now. Okay. That's what distressed debt is. A leverage buyout, it might be something similar where maybe the price of a company is down, but inherently it's a good company. And it might just be because of like COVID-19, let's say. Okay, so let's say, like what industry has just been destroyed by COVID-19? How about like a publicly traded company, or even private, I guess it could be, that owns, hundreds of restaurants around the United States. Okay? Like think of it that way, right? So you could go in and buy all the stock. Now you can like literally buy the company, or you could take a controlling ownership or whatever, but you buy up the stock. And now you can come in and you say, management team, I believe in you. But it's COVID-19 that's crushing this stock. So I can come in, I have more experience, I could probably hook you up with some loans and stabilize the vulnerability of this company so I can help you get better debt and we can get through this together and maybe we can launch some new initiatives together to bring in some money to get through this tough time. But I believe in you, management team. That's why I bought the company, because you're doing a good job. But I had to buy the company. I believe in you. I believe in the products. I believe in our employees. I like what we do. I like our restaurants. I like everything about it. The only thing is I bought the shares at, 20 cents on the dollar, and it's not your fault. So let's get going. Let's fix this. Okay? So there's a difference in attitude, you see? Yeah, so MGM might be another interesting one. Now, I told you back when MGM was like $8 that was worth considering to buy. And here's the example I gave you. And in investing decision making, you have to kind of look at things like this. So when COVID was, in March when it just hit, right, and everything, and the stock market dropped by 30%, stocks like MGM dropped more like by 80%. Okay. And MGM, I said, you should consider MGM because look at where the money is going to go. I said, they're going to have to borrow money because we all know Vegas is going to come back. People are going to go to Vegas again, but it might be a while and we don't know how long it will be. So in a situation where revenues are down 100%, right? These companies already have debt, and they're probably going to need to take on new debt and maybe restructure their current debt. So who's going to be able to access this new money? It's debt, but who's going to be able to access it? MGM Grand, who is a global chain and has prime real estate in all the best markets, or the kind of the offshoot off the strip, down the street hotel that you get on Groupon or whatever, right? Like, what about those companies? Well, they're not going to be able to access capital like MGM Grand can, right? You see, like MGM can call up their bankers and get the money they need. And they're like, okay, well, let's just get through the next 2 years. Give us some debt to get us through the next 2 years and COVID will be fixed and everything will be back and we'll pay off the debt. And in 20 years from now, we won't even remember COVID, right? So that's what they say. But then you get like, I can't think of a name, but like Hooters, right? The Hooters Hotel. I don't know if that still exists, but Hooters had a casino for a while. and they own some restaurants, and I think they owned an airline for like they had one 737 going from LA to Vegas or something. Like so that it owns some restaurants, and then all of a sudden it has a plane and this weird hotel, and they're like we're drowning in debt. Give us more money. And the bankers are like, hell no, man, no way. You got one crappy airline, one crappy casino, and a bunch of restaurants. We might like the restaurant, but we don't like the casino. Whatever. MGM is going to be able to get the cash. Well, debt, but they're still going to be able to get the cash, right? Because remember, your debt goes up, or right? So your liabilities go up, but now your cash goes up. What happened? Nothing. It balances. You owe someone $1 billion, but they gave you $1 billion. Nothing happened. Okay, so your balance sheet still balances. So whatever, MGM can get the cash, but the smaller guys can't. So you should buy MGM Grand at $8. Does anyone remember that conversation? I think it went to $30. But that's not the same, right? I don't want to invest in. Well, I mean, if it's just a pure equity play, that's a value play. MGM Grand's a great one. But what I'm talking about is if I'm going to be in something for 30 years and I want to collect a yield comparable to a bond, or ideally better than a bond, then I can't have that same determination. I have to have a different logic. And so I need something with cash flow. I don't want to invest into an empty 50 million square foot hotel with 90,000 employees, right? Cleaning the nickel slots. That doesn't sound good to me. That sounds terribly risky. I want free money. I want to sleep and earn money. So that's where that comes from. Okay. How do you get the what, Rosemary? The laptop or the desktop behind me? My laptop has 3 screens, which is really cool. Really enjoying that. All right, so this is the first breach, by the way. We just had this conversation. Down to the 55, then up, lower high, or double top, or in this case, triple top, double top of a double top. Okay? And so what I drew for you was probably like this, and then a consolidation, then back up, and then down. Well, that's all merged out now, Jeff, right? Mm-hmm. And twisted thoughts that spin round my head. Okay, this we've been watching forever. It's still fine. It's not great. It's still fine. Targets are still the same. We're still riding the 21. Nothing has changed on this since really, well, there's the one in July, but that's much riskier. So really, we were risk on about the 3rd week of August, which I think is about, let's say, the 25th. So this is the point in which we were risk on. By risk on, I mean short. And, and then the price action. Someone asked about price action. Okay. Double top, lower low, lower high, lower low, lower high, lower low. Oh, Okay. Lower low, lower high, 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 lower. Forever. Forever and ever and ever and ever and ever and ever and ever. It will fall forever until it stops. Okay? It will fall forever and ever and ever and ever and ever and ever until it stops. So right now, just on a daily basis, we're riding the 21. So if you want to zoom in on that a little bit more, ask yourself, so what is happening? Okay? These lows, so now I'm not looking at the moving averages, I'm not looking at the pivot points, I'm not looking at anything. That's a role reversal. So the idea here is if this is to remain bearish in the next 5 days, this needs to fall. Okay, so we tested it once here, we tested it again here, we tested it again here, and we may test it a couple more times, but what we're looking at technically, remember this is just technical analysis, okay, we're looking at this. Okay, so now you have to like train your mind to pay attention. Like this worked and that worked. Okay, great. So where are we now? Right? What's the now in this story? So now you got to look at this and adjust any way you see fit. There's no right answer. There's your decision-making process. So we need to stay in that range. Okay? We are we were approximately 1 standard deviation from the mean. Okay? And that means when you get 1 standard deviation from the mean, it tends to revert back to the mean. And then, of course, it's much more bearish if we're below the mean because M is a negative number. So right? So you want to sell high, and that's what all this is saying. So you can say there's a regression from overbought to back into the trend. There's a role reversal of price action. There's dynamic level of resistance. And based on analysis of the market, a future sell zone between 119.30 and 119.50. So which one do you use? I don't know. Whatever you want. Use them all, use none of them. But you still need to make a decision, right? So I'm just looking at it from right here. I'm staying woke. There only is not what there was. Okay? The other thing about this is I can only buy ZAR. So I can only short this. So there's another element on here, right? To all of this. I'm not even really looking at euro. I don't actually want to sell euro. I know I'm short euro making money, but I don't actually want to sell euro. I don't really give two hoots about euro. Okay? This is all about the Rand, and Rand is all about macroeconomics. So I either want to lend money to South Africa today, tomorrow, next week, next month, or I don't want to. But I cannot buy this pair under any circumstance. So very cool, right? To me, it's liberating because it's either a good opportunity to sell right in here or it ain't. That's it. That's all I have to decide. Right? And like they say in Monty Python, out here is way out. 1, 2, 5, right? 1, 2, 4, 3, saw. 3, right? You got to do the holy hand grenade. Oh my God. A holy hand grenade. So outside of Forex, are you guys looking for any investments during this COVID period? Did you buy stocks in March? Are you looking at like what I'm doing with picking up a high dividend because stock prices are down? Did you buy real estate or a business? Did you get a car for like practically free? Anybody looking at anything? I've seen some real estate, and you know I like real estate, but it's not really income producing real estate. It's a single family home, so it's not really. But I might be able to buy it for like 60 cents on the dollar. I'm like, built-in equity. I don't mean 60 cents on the dollar of what it used to be priced at. I mean 60 cents on the dollar of what it's worth. I'm like, well, that's interesting, isn't it? Because the interesting thing about that is it doesn't produce income, but what does it do? It instantly increases your net worth. Right? If you base your decision not on what it used to be, oh, well, it sold for this years ago, or this is what they listed it for, whatever. If you just as is right now sent in an appraiser and they came back and they gave you a number and you could buy it for almost half of that, but you know the bank would do the same thing. Like you go to the bank, you're like, I want a mortgage. And they're like, okay, well, let's see how much your house is worth. Right? Yeah, Jeff is like, real estate in the neighborhood is all up. And in many neighborhoods it is. And like I was saying a couple of days ago, apartments in places like New York City are way down. Rents are way down. But housing prices in the suburbs are way up. So here's the thing. I mean, when it comes to investing now, right? When it comes to investing, you need to find the deal. And that's the trick, isn't it? So anyways, I'm like, well, I could do that. That's interesting. Imagine, I don't know, I'll make up a number, but imagine you finagled things, did some financial engineering, right? And you signed a piece of paper, and the second you signed it, your net worth went up $300,000. I'll give you an example. Just like that. You signed a piece of paper, you're like, wow, that was easy. You didn't build anything. You didn't work. You might have to do that after you bought it, right? But the thing is, signing a piece of paper says now you own this asset. Congratulations, because you bought it below market value. Your net worth is instantly gone up. Now, real estate's illiquid, so you might have it on paper. You still would have to sell it at some point, and then you don't get that money until you sell it, you see? But that's the interesting thing about illiquid assets. And it's the same thing like when I'm looking at a stock, if I bought the stock I told you about, where it doesn't pay a 10% dividend. It pays a dollar amount dividend, and because the stock is so low, it's equivalent to 10%. So I'm buying a distressed equity versus a distressed debt, which we talked about, right? So if I bought a distressed equity, I'm saying 10, 15, 20, 30 years from now, some point in the future, the value of the equity will go up and I will have capital gains. Meanwhile, I will still keep collecting that dividend. Now, the yield relative to the new stock price would constantly fall. right? If the stock price fell, then the yield would go up, right? Price and yield, right? Price and yield, just like bonds. So I'm like, well, that might be interesting, but capturing the income and the appreciation. Well, that's similar to real estate, isn't it? So now if I can buy something distressed, I can capture some upside, but what am I taking on? When you're taking on a distressed real estate asset, you're taking on debt. You're taking on a debt because you're going to have either investors or, in this case, a banker that's going to put up all the money or most of the money. So you just owe them, right? So now you're betting on upside because it doesn't give you an income. And I'm like, ooh, it doesn't give me an income. But see, I like the income. You see what I mean? I'm like, And this house is like, you can't rent it. You can't rent it. You couldn't rent this thing. So anyways, so that's that, right? So you're like, I get no income, right? I can't eat the house, but what could you do? Well, you could buy it distressed. You could buy it for less than it's worth, right? And you take ownership of a piece of paper. Then maybe you throw some money in, like you throw some paint on it, throw in some new carpet. You do very little. And then you have it reappraised just to confirm what it's worth, and you refi it right there. Right then and there. So, 1 month into it, you refi it and you pull 300,000 out. Boom. Done. Now there's your income, and now you sit on it for 30 years waiting for the appreciation. And of course, you're suffering through inflation and all that, but whatever. So, right? So anyways, but I'd have to give up income. So, they're all interesting thoughts. They're all very interesting thoughts. Of course, Forex is better than anything. But like I said, there's going to be a point in your career where you have more than enough in your Forex account, and what you want to acquire over your lifetime, over your professional lifetime. Well, let's back up. What do most people do? Work in a crappy job, making other people rich their whole life. Every 5 years, you get a 2% raise, and people bitch and backstab each other to be one cube closer to the window. I've been there. I've seen it. And at the end of this thing, you've accumulated a couple of $1,000,000, and you'll live in a small house, and you eat cat food on Tuesdays and Thursdays, and you kind of hang around until it's all over. And I'm like, there might be a better way than that. And the better way is accumulate not savings, because remember, I told you, cash, this stuff here, money is for poor people, right? So you got to get that through your mind. You don't want to retire with money, because you're going to spend it and then there will be no money. What if you live too long and you run out of money? See, money, you don't want money. What do you want? How about 20 sources of income? 20 revenue streams that you accumulated over a lifetime. You see what I mean? So you're collecting rent here, you're collecting dividend there, you're doing this other, you own this little business and whatever, and you got income coming from all different places. Plus the value, because when there's income, there's value. When there's income, it becomes an asset, and assets appreciate in value as income goes up, or the price of the asset is established by the time value of money. The cash flow, you can figure out to the penny, let's say, the value of an asset based on income, right? So the cool thing is you don't want to retire with savings. You want to retire with asset income, right? So anyways. Yeah, oil going for 30. That's an interesting one. Let's move on to that. Sorry for the distraction, but all this stuff, we've planned it all out. And at this point, you're either taking your profit or you're not. I mean, so let's go to commodities. What were we doing again? Oh, yeah, oil. I don't see it here. XRP, XAU, Euro Yen at that guess. So I guess this is supposed to be... I'm cruising, I'm brooding, WTI. I'm cruising, I'm bruising, I'm never losing. I'm in my car going fast, and this is what I'm doing. Around the way is where I'm from, and I'm from Manhattan, and I'm not a bum. Skirt chasing, free basing, killing every villain. Drinking and robbing and stealing. Yeah. Just is in there somewhere. All right. My oh my, WTI, 35. Yep. Remember, our line in the sand was 40. I said, you have to make a decision. It's either going up to 50 or down to 30. So if you said down, you got it. You got it. Okay. Just supposed to move. Oh, Jeff's going to work. So, not bullish. Let's do something different. Let's do this. I'm going to really make this complicated. I'm going to go to Confluence. So now we have all kinds of pivots. But this tells me, 34 is interesting. Maybe 35 being a psych level. All right, we're approaching a bouncy. It's not buy, it's exit. You have to understand the difference. If this goes up, it's not because people are buying. It's because people are exiting. I don't really like buying exits, but this is stop hunting. So I know people have stops here and here and here and here. So I might come in later today, in fact, and start hunting their stops. Force them out. So that's just fun. Chasing their stops, okay? Okay. Okay, let's add a layer of complexity. And let's drop into... Okay. I see my price somewhere between 35 and 34. Really, the price is 34 and a half to maybe 32 and a half. So I know when to be ready, willing, and able. The next thing I can do is on the smaller time frame, wait for the slope to turn positive. Bow chicka wow wow, chicka wow wow, bow chicka wow wow. See what I mean? So there we go. You will know the Lord. Peter said, so ECB is going to recalibrate. Nice. Okay. What does that mean for us? Dude, it's so funny. It's, what is it? 9 o'clock in the morning. I am so tired. I'm so tired. Okay. All right. So what does it mean? Recalibrate. See, I'm not sure if the ECB even matters to me. Like, what is that going to do? Well, crypto, where do I go? I can't have a vacation. I looked at it. My wife's like, let's take the family to Florida for Thanksgiving. I'm like, I don't want to do that. I don't want to go. I don't want to do that. So, yeah, I'm too tired for vacation, right, crypto? I'm like, I don't want to do that. Anyways, this is all interesting. This is all very interesting. I'm still bullish global macro, if not now. If we go into another 6 months of massive COVID issues, cool. Well, not cool, but I'm looking out when it comes to Forex. I'm looking out about a year. When it comes to like investing in different asset classes, or right, and that's, I suppose, the difference. I trade Forex and I invest in other things, right? So when it comes down to investing in other things, like if I buy a stock in a company, right? Like I bought Bank of America at $5. I'm in it for the long haul, like forever, basically, almost forever, until I need it or want it. I bought Apple at $6 a share, Apple computers. Yeah. Like if I did buy, I missed it. I didn't have the cash in the right account when it came to buying MGM, for example, at $8. I talked about it. A friend of mine, he and I had a call about it. We specifically talked about not Carnival, the other cruise line as well. Maybe it was Carnival. We talked about Carnival and we talked about MGM. But I didn't have the right cash in the right account, and by the time you move the cash, it takes a couple of days, and then you get into that account, and it takes some time because most of the cash is sitting in a wealth management fund, so the manager has it, and he can't do things the way I want. So anyways, by the time I could pull the trigger, it was already gone. But if I had bought MGM Grand, it wasn't to make $2, right, on an $8 stock. Like, look at that. That's a huge percent return. No, I'd be in it. I'd be betting on people going to Vegas 25 years from now. So I had missed that one. But that's the major bet. Do you think MGM will still be a company 25 years from now? Will people still go to Vegas? Will people go to Macau? Well, people are not going to go to Vegas and Macau if you walk into a hotel of 30,000 people and you get sick and die. And what if COVID never goes away? What if it's like the flu? So I know someone who's older, a retired gentleman, and he knows a few people that died of COVID. They were older, but not old. I mean, 65 to 70-ish. And he's like, everyone compares it to the flu. And he's like, my whole life, I don't know anyone that died of the flu. But a couple of people have died of COVID that he knows of, right? So you're like, huh. So that's true. That's the ultimate number, isn't it? So if we can't fix this, if it comes back every year, no one's going to go to MGM Grand. So that's the big determination. Another one was I remember going through Starbucks drive-through in the worst part of 2008. Did you know you could buy Starbucks, I think it was $7. And I remember spending like $20 at Starbucks with my wife. And we're in the drive-thru and we get this. I'm like, do you think Starbucks is going to be around 10 or 20 years from now? And she's like, yeah, I do. Like, we should buy the stock. Well, it went from $7 to, $120 or something. So that's the thing, right? So anyways, going back to the euro, I don't think anything the ECB does right now impacts the value of the euro, right? I think this comes down to the Fed. What I do know is on Thursday and on Friday and on Monday, I told you if you were short the euro dollar at 118.50, the target was 117. That's that. Has nothing to do with the ECB. It has nothing to do with anything else. Global macroeconomics, Fed. That's it. And if the euro gains strength this morning, you might say it's the ECB meeting. Just like eating ice cream makes the temperature go up outside. Ooh, it's a cold day. I should eat ice cream. Warm things up a bit. That's what it, right? Because ice cream sales skyrocket on hot days. But the hot days are not created from the ice cream sales. Okay? So you might say euro got strong because of this new announcement. No, I think if the euro gains strength today, it's because I told you on Thursday, Friday, and Monday that at this price, it would go up. And it just, there's always this issue of timing, right? So that's that. So I will sit around waiting to see if I'm going to buy some oil. Going to maybe start chasing hunting down some stops. There's a couple of exotic plays that look kind of interesting. Okay. Okay, and check it out. Look at that. 117 is right here. And look where it actually bounced. 116.93. The reason it drops a couple of pips below 116.93 is it needs to cover the spread to take you out. So I can tell you this wick right here is 100% created by traders that know what they're doing. You either know what you're doing or you don't. So they were short here, down, and they put their stop at 116.93. Price went down to 116.91, which means the pink line is the one that will take you out. The pink is above the black. So it has to come down 2 pips below. The red line triggers the stop, in this case the limit, right? The red line triggers the limit. So when the red line hits 116.93, traders are exited and it goes up. So not only are we accurate, you could say, well, we're almost accurate. That's like 2 pips within accuracy. No, that is 100% based on the bid-ask spread, 100% precise. And we can calculate that, if not on Thursday, Friday, certainly Sunday afternoon, because on Sunday, right at this time when the market opened, all these things were calculated. And if you're a bear, you took profit and you needed price to hit 116.91 so that your ask could hit 116.93, and at that point you offset out. And you knew days and days and days ago. So I would propose that this is not a random walk, and that there is logic and intelligence behind these markets, even under times of duress. But if there's logic and intelligence behind it, you need to take control of your trading so that you can plan for these things and adjust for these things. You can plan days ahead. You can plan weeks ahead. You can plan months ahead. I'll reiterate, I know exactly what I want to do in January. Okay? So it's only October. Okay, cool. So, plan. I want you to focus on planning. I want you to focus on analysis. To say everything's in the price and that's all you need to know is not correct. Now, do you need to know price action? Oh, yes. Okay? But you have to know the potential for future price action just as much as the price action in the moment. Okay? So that you can say on Sunday, okay, I'm going to sell it and I'm going to get out at 117. Done. Nice. Okay? So stop your short-term reactionary fly by the seat of your pants, go with your gut decision trading. So stop doing that and become the trader that you want to become. And I know you want better than that. So, without further ado, thank you for being on my team. Thank you for being part of the 16,000 foreign exchange traders, part of our Forex.Today YouTube community. And I will see you tomorrow. Thank you for your likes. Click the thumbs up before you go, please. Thank you for those likes, and thank you for the comments. I do read them. 2 out of 3 comments are spam. It's just terrible, isn't it? It's amazing that YouTube doesn't do anything about it. But I think maybe all the comments push up the value of her, of her videos. So anyways, but I sort through them and I read the real ones. I read yours. So I thank you for that. And I'll see you tomorrow. Cheers.